All right, guys. So, welcome to this webinar on using AI and venture capital. I am here with my good friend and colleague, Mr. Brom Rector. Today, we have a very fun agenda planned, which we'll dive into, but figured we'd give some quick context about ourselves first. And so for me, I'm currently the founder of Atas VC. It's an early stage venture capital firm focused on pre-seed and seed investment, mostly around the sectors of what I would call American necessities. So using applied AI, robotics, and connected devices to disrupt problems in agriculture, manufacturing, energy, etc. I'm also the founder of Viridian Technologies, which is a bespoke AI consultancy for family offices and private equity firms. My background, I've been in institutional venture for the last 6 years. Prior to that, though, I was a research scientist at NASA's Jet Propulsion Lab, writing software to model the interior of Europa, which is where a lot of my ML expertise comes from. I've been coding neural networks, other AI models since, like 2017, even played around with GPT-2 before they launched that publicly. It was not as good as GPT-3 or even GPT-5, but have been around this ecosystem for a long time. And I'll pass over to Bram to give some quick context about himself as well.
Thank you, Andrew, and thanks so much to everyone for coming. I really appreciate the attention. So, yeah, I started a venture capital fund called Exia back in 2021. Exia is focused on frontier healthcare and wellness technologies, so things like biotech and longevity and all that good stuff. Prior to that, though, I spent 8 years working in the quant hedge fund space at two different hedge funds, and I was doing everything from building machine learning based trading models to sentiment analysis on Twitter discourse around public market equities to using AI and machine learning to automate back office processes. And a lot of the knowledge that I applied there was from my time that I spent studying machine learning at Georgia Tech. So I've been doing AI in the investing world for almost a decade. And I'm quite excited to talk about how some of the learnings from those experiences at the hedge fund translate into the venture capital world.
Awesome. So really quickly, just running through agenda today, and we'd love for this to be a lot more interactive. Webinars are often, in my opinion, some of the most boring forms of communication that exist. But we're going to just go through section by section. If anything comes up, feel free to drop a note in the chat, use the raise hand feature. We will get you spotlighted, get you unmuted, and we can chat through. But we're going to briefly cover just some slides on the history of AI and venture capital, some of the lessons from other asset classes. We'll do a quick primer on the different types of AI models and the core architectures we're seeing used today, and then we'll delve into some of the direct applications in sourcing, selection, etc. All of the things that you will typically want to implement as a venture capital firm, things that we have implemented both for our own firms and for other firms and family offices. And then we'll go into some of the limitations of AI, how to implement AI, how you can use it today, what are some of the build versus buy solutions. And then we'll talk a little bit about where we think the direction of AI and venture capital is heading. Have some time for Q&A, closing remarks, typical fun webinar on a Thursday morning. Uh, so we'll just start diving in here and talk about, the things that you should know about AI. And for me, and something I think that's really important to note that often gets glossed over is that AI and venture capital is not really a new development. So venture analytics, starting to use these like data sources using linear models, logistic models, prediction, it goes back to the 2008 era, the post, financial crisis era of venture capital, where you started to see Crunchbase, PitchBook, CB Insights, these large data aggregators, data platforms emerge. And then with those, you'd also see these funds using, pretty simple models. So more of like signal predictors or, a direct regression model to try to figure out what companies might or might not succeed based on core premises. That evolved a lot around the 2020 boom. So you started to see these AI native sourcing platforms. So people using web scraping, using high throughput automation, building for these, it's not AI in the sense that we refer to it now in LLMs, but very like AI driven platforms. So people like Harmonic, Affinity, the CRM platform, and Apollo.io, another web scraping platform, those were all founded in around that era. And these platforms have continued to develop to about the boom that we're having now with the LLM developments, with the advent of these really complex large language systems in 2025 that people are using effectively in many cases to directly replace analysts and directly replace team members.
All right. So, what lessons can we draw from other industries that have implemented AI? Like I mentioned, my background was in the quant hedge fund space. Before I started this fund, the most recent job I had was at a $9 billion hedge fund in LA called Crable, and everything there was done based on AI and ML. And there are some interesting kind of lessons on that are both positive and negative from the quant hedge fund world. I mean, on the one hand, some of the most successful and well-known hedge funds of all time are based on quantitative methods and machine learning models, firms like Renaissance Technologies. But there are also a large number of high-profile epic fails from quant-based trading. So think of like long-term capital management and the massive blow up that it had back in the early 2000s. Um, one of the big lessons that I think one can learn from applying quant models and machine learning models to the public markets is that markets are not stationary, meaning that the data distribution kind of shifts over time. And what that means in simple terms is that a model that worked on a market from, a few years ago may not work today because the underlying dynamics of that market have shifted, and it's just kind of impossible to train a model that's going to just be able to naturally adapt to whatever the new dynamics are. So when you think about what that means when you apply it to the venture capital world, you could very easily train a machine learning model based on all of the unicorns of today, looking back 10 years to when they were founded. But I think that most people would agree that like the unicorns of the next decade are not really going to look like the unicorns of this decade or decades past. And so the things that might signal a good investment or a, high multiple outcome investment from those historical data sets are probably not going to be very relevant to like what the world going forward. And what compounds this difficulty in venture capital is that there's such a long lag between the investment decision process and knowing if it was actually a good decision or not. So if you're talking about seed stage investing, you make the investment and 10 years later, you know if it was actually a good outcome or not. And so if you're trying to build a data set to train an AI model, it's almost like you're only going to be able to work with data that is many years, and in the case of early stage investing, decades plus stale. So I'm somewhat bearish on the potential of AI to be directly responsible for the decision-making process because of the reality that it's just impossible to build a large-scale data set of what the future is going to look like when you account for the fact that markets are non-stationary and are constantly evolving. Um, the private credit and private equity worlds, they've been using AI quite a lot for improving portfolio company operations, which is a big way that they make their money. And there's been a lot of success in that area. We've heard a number of case studies about that. And so I think that venture capital funds, especially like later stage venture capital funds, as the line between private equity and VC continues to blur, you'll probably see a lot more of that happening. And if you want to take like some maybe cautionary tales from non-investment related industries, you could look at autonomous driving and the healthcare ecosystem. So everyone knows that we thought we were going to have self-driving cars like a decade ago. Turns out it took 10 years longer than expected. I think that if we ever get to a point where there's like a fully automated VC firm, it'll probably be a lot longer than, we think in terms of, actually getting something like that set up and implemented in a way that works. And if you look at how AI is being used in healthcare, quite effectively, by the way, it still always has some sort of human in the loop, both in the training process and in the inference process. And so I think that you'll probably end up seeing a lot of venture firms that are heavily AI augmented, but I don't know if you'll ever get to the fully like automated start to finish investing lifecycle VC fund, but it's possible.
You never know. There are some people already out there pitching those, and you'll see them make some good headlines. But whether or not that substance is there or the DPI will ever show up is a whole separate issue.
I guess as
Um,
long as they get the management fees, it's okay.
yeah, it's a strategy I'm not personally a fan of, but yeah, it works for some people. So moving along, some of the core model architectures, I'm only going to talk about the LLM side personally because that's what everybody seems to be most interested in these days. There's endless applications of these large language models, and effectively these systems are a more complex version of your complete the sentence engine that you have on your iPhone, but it's much better than a complete the sentence engine because obviously you can ask questions and get responses. Where this is obviously then most applicable is in research diligence, trying to figure out if something fits a thesis just based on context and understanding of a pitch deck or similar. You're also starting to see some people build custom type RAG models, so domain specific knowledge trained on your internal firm data, internal documents to allow a more interactive process that can retrieve documents that are stored in your Dropbox, stored in your CRM, call back to conversations they've recorded. That also pairs well with the semantic search, so better database usage, queryability. Those are all things that LLMs are very good at and very well attuned to. LLMs are a lot less good at actually understanding anything. There's no understanding in an LLM. It's a context engine that predicts the next thing that is most likely based on that context, which is something pretty important to understand when we think about limitations of AI and what it maybe is not quite that good at doing right now. And the joke being that, Brom and I will chat and we'll say that like AI right now is about the level of like a dumb undergraduate intern if you gave them unlimited time and unlimited access to Google. And it will definitely get better, and it is getting better, but it may or may not get that much better. And so you have to limit those use cases for the LLM.
That's correct. I mean, one of the use cases that's not really mentioned on here is these like video chat models that are starting to pop up. I do think it's only a matter of time before a lot of VCs start having AIs just take pitches. So you show up to pitch a VC in the Zoom, and there's not actually Mark Andreessen there. It's Mark Andreessen AI, and he's talking to you, and then he, summarizes how that pitch went and sends it back to the investment committee. I think that we're going to start getting a lot more of that type of stuff happening. I mean, only a year ago, it was weird for people to have like Zoom AI note takers, and probably a year from now, people just start sending avatars to meetings instead of even showing up. We'll see.
I mean, there's still an interesting taboo around that too. And this is like one of the broader things with venture to consider as well, is that there are things that you absolutely can do with AI that you may or may not want to actually do based on how the public will react to it, how your
Yeah,
LPs will react to it, and how founders will react and then spread throughout the ecosystem. Um,
yeah. All right, shall we jump to the next component here?
well,
Major I.
do you want to cover the other AI model types quickly or
What, ungenerative, generative?
yeah, supervised models too.
Yeah.
It's
I mean, so if it comes to if you're gonna actually try and make some sort of investing decisions, obviously supervised models are what you're going to be using. Supervised meaning that you have a set of labels that you're trying to train some sort of function against a set of input data to predict those labels. So this is going to be the label in this case being what was the exit valuation of the company, and all the inputs being characteristics about the founder, what their pitch deck looked like, etc. These suffer greatly from the issue that I was talking about before, that any sort of like quantitative finance model suffers from, being that like the distribution of those inputs is constantly shifting. And in venture specifically, there's a very long lag between generating the input data and generating the output data. So I think it's going to be quite challenging to make use of these models when it comes to actually making investment decisions in venture. But you could probably use them for other things. Um, you could potentially build models to predict, is this fund, or is this company rather going to be able to raise their next round of funding, which maybe gets you a signal as to what their ultimate outcome is going to be.
Yeah, and I think the other thing to add there is like you can predict when companies might fundraise. There's a lot of minutia you can just sort of distill on those more technical numerical values that predict quite well versus some of the things that predict more poorly.
Yeah.
Uh,
One of the challenges with any model, really, no matter which architecture we're talking about there, is that there's this concept called survivorship bias, which is something that comes up all the time when people try to do like machine learning analysis of financial data. And basically, the idea is that the companies that don't succeed oftentimes just don't show up in the data sets. And so whatever data set you have is biased towards companies that are still around or at least became high profile enough that their failure was noted. But you probably have this whole like graveyard of companies that kind of stayed stealth and then just never really, for whatever reason, didn't make enough headlines to show up in whatever data set you're using. And so you're by default just overestimating the probability of success of any given company because of that survivorship bias. So definitely use caution when anyone tells you that they're training any sort of model on venture outcomes because of that survivorship bias issue.
Yeah, absolutely. All right, I think we can move on into some of the AI applications and some of the things that Brom and I both built for ourselves and for other people over the years. Um, AI and sourcing, if I had to be honest, this is by far the most common use case you're seeing right now, where everybody is looking for an edge for sourcing. You know, when you go into an LP call, the first question you'll be asked is, how do you source? How do you win deals against your competitors? And unfortunately, that's becoming fairly commoditized, where it's more and more competitive these days than it ever was. And so you're starting to use these massive data platforms, data aggregators, so your Harmonics, your PitchBooks, your Spectres, your Aviatos, and then you're layering AI on top of those to figure out what companies are actually a fit for your thesis and doing maybe a first level pass of some enrichment, whether that's through Perplexity, you know, Como, another AI search engine. Some people just use a Google automation tool, Selenium. That's just a general Webflow automator. And then you can also generate that outreach on top, send outreach to founders in some cases. Although, again, you run into that issue of like, should you be using AI to send outreach? Should you be personalizing it? Will you lose on your hit rate if you do that? Either way, regardless of where you fall on that debate, that's by far the most common application I'm seeing. As a number two, it's on filtering inbound. So similarly to how VCs might use AI to prospect new startups, startups are using AI to prospect new VCs and to send outreach to them. I personally am inundated with more cold outbound than I would ever care to deal with. I know Brahm is too.
Yeah.
And so something that I both coded on multiple occasions and also deployed internally is a system that will automatically take information from a pitch deck, from a pitch email, strip that information out, analyze it against my thesis, determine if it's a fit for my thesis. If it's not a fit for my thesis, it will send an automatic pass email. If it's maybe a fit for my thesis, it will send an email to me saying, you might want to take a look at this. Otherwise, if it knows that's a solid fit, it will just automatically send a scheduling link. I also use an AI personal assistant, includes the personal assistant on the thread. Everything gets scheduled really easily. And then you track all of that in CRM as well. That is by far, these two applications are by far the most common that you're seeing these days because it's easy to implement. You can implement it yourself without too much effort, without too much money spent. And it does make a major difference. You know, you'll save 10, 15 hours a week on time. Cami, what's going
Yeah.
on here? Let me uh I will ask to unmute there, if that works. Cami, are you able to unmute there?
Okay, now I can unmute. Hi,
There we
sorry
go.
for that. So on this point with using AI in sourcing, I was curious where the whole narrative around proprietary deal flow comes in. You know, if that's still a thing, because like back in the day, it was like, oh, I have access to these founders, to my network or what have you. Now there's so many tools where like, you know, just stuff what's in the public domain or regular domain is accessible to everyone. So just curious how you think this whole trend fits into that narrative.
Yeah, I mean, so at least for me personally, I view it more in terms of winning deals and then finding things that never get logged on AI. The exact example I can give for this is I'm currently evaluating a deal that Andreessen Horowitz is leading. They put out a term sheet before the company had incorporated, before there was any signal that you would have seen online to be able to identify if that company was being founded or not, because they've been tracking it for a long time and then immediately pulled the trigger as soon as it was ready to go. That is still a very proprietary deal flow mechanism. You'll still see that with university relationships, with a lot of the overlap and like more complex networks. So exited founders who want to start their next deal. But broadly, for the 90% of the venture ecosystem, it's a question of how you're able to select and then how you're able to win the best deals, at least in my opinion. Brom, I don't know if you want to add anything there.
Yeah, I mean, so I think that you can still use publicly available data in a proprietary way. I mean, this is what basically every hedge fund does, right? Like everyone has access to the same data. It's just a matter of like how you look at it and how you analyze it. So, for example, if you're using Harmonic, for example, or one of these like tools that basically scrapes LinkedIn and identifies when people change their bio to working on something new, that's like level one of using publicly available data. But if you're a fund like me who focuses on a very specific area of biotech or science, there are other areas, there are other websites or data platforms that one could use to find people that look like they might be starting a company. So, for example, I could build a bot that looks at like bioarchive and looks at like people that are releasing interesting preprints and then cross references that with other social profiles that suggest that that person might be like more entrepreneurial than the average person, and then like preemptively reaching out to them. So that's something that, I can set up for myself that is relatively proprietary that someone else may or may not do.
Yeah, that's actually a really good point, and it's something that I also leverage is like custom web scrapers. So
Mhm.
a lot of these platforms are limited on like data availability and also are restricted to things like public access or easy to parse and easy to format, where me personally, I can take a more incomplete data approach. And so I have a web scraper set up that recovers about like 20% of Y Combinator applicants every batch cycle. And that's something where the data is super incomplete, it's super messy, but I can sift through that, whereas you won't see Harmonic or Spectre putting that into their database either. And that's something I coded myself and, runs on some secretive algorithms. So there are still ways to get proprietary access in this world.
100%.
All right, so this goes along really well into our next topic, which is using AI to actually select. And there are both very complex applications of AI in selection and very less complex. So I'll lead here with the most complex I've seen, which is one firm who trained an adversarial network. So basically two different models that debate against each other to try to optimize for an outcome. And train an adversarial model to debate investment decisions and take notes on the different points on each side. That was rare in an edge case and also not something I necessarily recommend that you would do. However, it was an interesting application of AI. On a more common side, you're seeing like a logistic regression based prediction just based on data. So there's one firm that I know of that will take in data about whoever's leading a funding round, and they will say, based on this lead investor and the direct investor and the other companies that that investor has invested in, it evaluates if that investor is a quality lead for the business. And then if they're a quality lead, they will automatically write that check without any further diligence. Generally, approaches like these work well if you're doing something like a, signal analysis or later stage investments like Series C, Series D. It'll suffer a lot at the earlier stages because there's a lot more qualitative information that goes into it. But it is increasingly easier to automate, the memo writing, the modeling, detailed research. And again, going back to Brom's point earlier, we're still dealing with huge lags here. There's a level to which I'm personally bearish that AI will ever be able to replace the selection job of the venture capitalist. But we'll be discussing that more later. So I'll let Brom take away on the next one.
Yeah. I mean, one point that I'll make here is that while I know I was very negative on the potential of AI and making investment decisions, one thing that I found AI to be extremely good at is doing very thorough, referenced scientific due diligence. I mean, we do a lot of biotech and life sciences stuff, and there have been so many times where I've been sitting around with my co-GP Samantha, and we've been debating this company or that company, and we'll write down, what our big concerns are, and then we'll dump the memo, or not the memo, the pitch deck in the data room into Gemini and ask it to do an analysis, and it'll raise the exact same concerns that we raised, plus three others that we didn't even think of, all with multiple references to, legitimate sources that sort of support those concerns. And um, I do kind of believe the meme of there isn't much use to hire technical analysts anymore because ChatGPT and Gemini and these other tools are getting so good at doing this sort of like data-driven due diligence of whether, a company's fundamentals are sound or not. Now, of course, that's not to say just because some company has a solid scientific foundation doesn't mean the company is going to be successful, right? There's all sorts of other softer things like team composition that ultimately determine that. But for getting that hardcore scientific diligence out of the way, I mean, AI is incredible for it.
No, absolutely. All right. So the some of the things that are more niche, and we'll run through these a little bit faster just in the interest of time. Your post-investment value add. Usually this plays in terms of network and recruiting. So tracking your LinkedIn network better, automating notifications when somebody changes jobs, when they've hit a vesting cliff, when even people in the broader ecosystem might have hit those cliffs. You can also use it for recruiting in terms of doing, your resume reviews, your screenings. These are all very basic applications though, and you don't really want to use it for the more advanced handling here because frankly, the most important part about network and about recruiting is oftentimes that personal touch. And that's where AI often falls flat on. And that's why even though, we put feedback in here as part of our notes because in a couple instances, I have seen firms training AI models, like Brom said, as they like fake Mark Andreessen, using their frameworks to give like detailed feedback. And so founder submits a pitch, submits a video, and they'll say, "Hey, our AI reviewed your pitch, and we don't think your market size is quite big enough to support a venture-backed business." Um, and it's a dicey application of AI because as a founder, if you go through the time and effort to fill out these forms and then you have somebody's AI model giving you feedback that's pretty harsh about your business, that is a very, very fast way to lose trust and to also just like offend somebody because it's not even worth your time to review it. You had the AI model do it. And so this is some of the things where, yes, you absolutely can use it to review, give feedback. It's only as good as, your training data. And then again, in some cases, you may want to not disclose that it's AI, or you completely own it and say, look, we receive hundreds of pitches. We know that this is out of scope, but here's still the best feedback we can give you.
Yeah,
So a
personally, I
little bit
feel like
rare.
I'd
Yeah.
be pretty annoyed if I got some, AI generated feedback telling me that my business idea wasn't good from some VC. I feel like that just puts a bad taste in someone's mouth. But
Brom, we do have a
that's just
question in the chat. What are your
okay,
thoughts on
let's get to it.
consensus for scientific DD? That's not a platform I've used.
Yeah, I've never used it either. I wish I had thoughts. Maybe I should check that
Yeah.
out.
So frankly, I do all my own scientific due diligence. So that's all right. Do we want to move ahead?
Yeah, let's move
Yeah,
ahead.
let's do it. Okay.
AI and back office operations. Yeah, this is quite interesting. I mean, I think that we are starting to see an emergence of these like micro law firms, micro tax firms that are enabled by AI and that frankly wouldn't have been able to operate just 5 or 10 years ago because they would have had way more overhead on personnel. So, for example, the law firm that did the formation for our fund, the investments lawyers, they're very legit lawyers from, top firms, but their entire back office of their firm is largely AI and automated, which allows them to charge much less than, um, Gunderson or someone might. So with these new class of microservice providers, you're often, spending $30,000 to get a fund set up versus, 100 plus that a big firm, a big white shoe law firm might charge. And I think this stuff is overall good for the ecosystem. As the cost of doing business go down, that means that there can be more money pouring into venture and the market gets, more and more efficient, which I think is good for everyone involved. So I think that that stuff is exciting. Obviously, you do still need humans in the loop, just like what we were talking about earlier with how AI has been used in healthcare, because you definitely don't want some AI hallucination making it to your LP's K1s. That's going to be a headache for everyone involved.
Yeah, not a good time. And I'll say like full transparency here, like I use AI automated fund admin. I use AI automated. I'm going to be using AI automated tax systems too, and I have a AI augmented law firm. For me, I also trust myself enough to check some of the assumptions, and I've had to correct some of the assumptions in those cases. So it is a double-edged sword in a lot of ways. We have another question in the chat. So the ramifications for entry-level roles and entry-level VC. Um, Maybe this is a hot take, but I'll say that like I don't think most entry-level investors have much intrinsic value by themselves. And there's always the joke that ventures this like apprenticeship industry, right? And that it is like you not providing much value for the first couple of years at a firm, and then hopefully at some point in time you transform into someone who provides value. I've found that to be the case at both firms that I've worked at, where originally I wasn't providing much value, and then hopefully I did towards the end of my tenure. Um, and then when I was at a more senior level, the people that we hired at the lower level were not supposed to provide that much value, but they were supposed to be getting that training, getting that experience. And so I don't know if it changes it that much. Brom, I don't know if that differs for you because I know you're looking at potentially hiring somebody at that junior level right now.
Yeah. Well, I guess the point that the person asking the question is trying to make is that maybe these new people don't even get hired in the first place now. I think
No, I mean, I think
that's
they
the
still get
concern.
hired because you still need the senior level of people in those boardrooms, right? And they're not really providing any value now. That won't be different with AI necessarily either.
But why bother? Why bother hiring someone if you
Because
can
you
do
have to
most of their
you have to
job?
train them. You still have to train them one way or another for the specific people skills. I don't know. I maybe that's personal bias, but uh, we should probably keep going in the interest of time.
Well, I'll say
Yeah.
this is an anecdote, not very like a legitimate, you know, peer-reviewed like multi-observation comment. But one of my LPs is a portfolio manager at a hedge fund that manages something like $20 billion. They have 300 employees. And he told me they haven't hired any new analysts in the last 18 months because they're realizing that they can use AI to do most of an analyst job.
I do think you can do most of the analyst job. There's one more question in the chat around, is there a clear winner emerging and is it becoming a saturated market for these AI tools? And could you build these yourself? Yes, you absolutely can build them yourselves. It's not cheap and it's not easy. At least for the web scraping, it's quite hard. So like the full transparency here is I led our investment into Harmonic from Builders VC's Fund 2. Um, and I did that because I had spent 2 years trying to build the system that they have and failed. And look, I'm not, the world's best ML engineer, but they're effectively web scraping LinkedIn. A lot of these platforms for the data side web scrape LinkedIn. LinkedIn has a team of 20 PhDs in machine learning to try to stop you from web scraping LinkedIn. And so you have to be creative and have a lot of money to do the data side. For CRM and tooling, I actually do often recommend that people build it themselves. Andreessen Horowitz, Sequoia, a lot of the other big firms you'll see have their own internal CRM systems. It's not that hard, relatively. It's not that expensive. And then you'll get something that actually works for your workflow and you're not paying a massive recurring fee for. But if you're a smaller shop, if you're an emerging manager, it might not make sense to build it yourself, really.
Yeah, I think just to double click on Andrew's point, it's Reaplet and Lovable are great for building front ends and apps that just work on a well-defined data source. But the challenge, like Andrew mentioned, is that web scraping is very adversarial. So the thing that you're scraping against is always changing and always finding new ways to stop you. So it's almost like a full-time job to stay on top of it and make sure the thing works. All right. So that said, jumping to the next slide here. AI and fundraising. I mean, I know Andrew and I have kind of debated this a little bit. I do think it's only a matter of time before larger, well-known firms and maybe even some smaller firms will have LPs just talk to like an avatar of the GP. Jason Calacanis launches his fund 7 or whatever, and unless you're investing, 5+ million, you don't get to talk to the real Jason. You have to talk to the AI Jason. And you just talk on a Zoom with like an avatar that looks pretty much like Jason and says very Jason-like things. And like I said, yeah, you don't get the human interaction unless you pay big for it. So I do think that we're going to start seeing that. I've been pitched by a number of funds, or sorry, by a number of startups that have sent me like custom GPT data rooms rather than like a traditional Dropbox folder or something, where I basically just have to chat with the data room instead of look at the files directly. And I mean, there's obviously like a natural aversion to that, but I think that is just because I'm used to doing it the old way. But I think as time goes on, this is going to become more and more common. What do you think, Andrew?
Yeah, I mean, we'll see. I think there's a level of inefficiency that that creates. And at that point, like when you have a model of like a Jason Calacanis, for example, I think those people would have already made a commitment just without seeing any data whatsoever. And so
That's
that's like
true. That's
where
true.
what's the value add? I at least don't use AI in fundraising, mostly because of general solicitation and concerns there. AI note takers, though, have become my absolute favorite thing in the world because apparently, for decades it was taboo to be recording your conversations and to always be recording calls. Now you can just do it casually and nobody thinks the difference. And oftentimes, like I at least can tell when somebody turns off of a conversation. But you want to be able to go back and track and say, what did I say that made them lose interest? When did I lose the person? So I think that's pretty interesting as well. Um, Okay, so we have a question in the chat. So I'm just reading this here. For smaller funds, there's more interest in using Zapier and integrations to build time. The few tools that you think are going to work around and stick around for a while. That's a really interesting
Yeah.
question.
Well,
Uh,
the one that you didn't mention that I think is pretty awesome is N8N.
yeah, I think N8N is solid. Uh,
I always
I
call it Nathan, but I think that's wrong.
that is definitely wrong. But I think it's N8N. I realistically. Those tools are all super limited in terms of like more advanced applications. And I'm kind of a believer this just becomes a great race to the bottom, where because it's not that complex to build most of these integration toolings, like you'll just see 100 different skins of the exact same product. So I don't really know what will stick around and what won't. I will tell you, like, don't think OpenAI is going anywhere. Don't think Anthropic's going anywhere. Those are companies with enough of like a cash infusion barrier to stop people competing. Most of the rest of these don't necessarily have that, and I think you'll end up in a race to the bottom. But that's a personal belief that is one of my more contrarian takes, and also why I don't invest in what I would call like anything that's loosely an AI wrapper.
Yeah. All
All right,
right, to the next slide here.
to the next slide. Approaching
Which,
implementation. Good timing. So, I do love this photo of a cat that's very real and very not generated with ChatGPT. But something that like, and we've been hinting at this throughout the presentation, but we just need to hammer home here, is that these models are not actually intelligent. They're all understanding statistics. They're all using statistics to make decisions, and they are all about as good as the data that you feed into them. In the cases of an LLM, that is the bulk of the internet, which means that they will always be capped at being about the average of the bulk of the internet. This is why no matter how hard the OpenAI tries to train around this, you still have hallucination, you still have misguided answers, you still have overfitting. You also still have like a lot of vulnerability. Brom and I were playing around with this tool called Gandalf AI this morning. It's published by a company Lakera. I'm a really big fan of it. It's basically you have to try to use prompt injection to get a model to reveal a secret password. It's a really fun thing to play around with, but it also shows that there's like big vulnerabilities. And then that also comes with a cost where at least in venture, and look, I don't do this, Brom doesn't do this, but there are a lot of unpaid interns, there are a lot of underpaid interns. I have many friends who've hired MBA interns for like $2,500 a quarter. It can cost you hundreds of thousands of dollars a year to either implement or maintain these models. So at that point, would you just be better off hiring a team of 10 interns? Probably you would be. Um, Even if they look like the cat. That's
yeah. I think that's a good point on the cost. I mean, a lot of this stuff kind of seems free at first glance if you're just messing around with ChatGPT or Claude, but we have to keep in mind that we're still in the heavily VC subsidized phase of AI and large language models. And as time goes on, that VC subsidization is going to go away, and we're going to eventually have to start paying full price for AI. And it's probably going to become a lot more expensive and potentially even closer to par with having humans do it.
all right.
All
So we got
right,
a couple
so
more slides here that we'll run through quickly just because we want to leave about 15 minutes for Q&A. And I will let Brom take the lead on this as the Mark Andreessen backed fund.
that's right. That's right. Yes, I mean, Mark made headlines recently in that podcast where he probably in an intentionally slightly trolling way, said that VC might be one of the last jobs because it requires so much human touch. But I would probably take the other side of that bet. I think at the end of the day, like most VCs don't even really develop that much of a personal rapport with the founders they back. And I think that capital is kind of like a commodity, and just whichever the real race to the bottom is in whichever VC can allocate capital to founders the most quickly and efficiently. And might end up being the case that AI ends up figuring out how to do that better than humans. And it might end up being the case that just like many humans seem to prefer to talk to ChatGPT than to talk to a therapist or a friend, many founders may prefer to talk to a GPT that can wire them money than a VC. So, I think that Andreessen might get automated out of a job at some point in the near future. That's my personal take.
Yeah, and I have a fundamental and perhaps contrarian take that venture capitalists don't really have a purpose in the first place, other than serving as a relationship layer and having that personal relationship with LPs that allows them to allocate that capital. I mean, if you do look at the benchmarks, most funds do not outperform the S&P 500. I think that's a showcase that most VCs are just really bad at their jobs. Like, I don't think that there's any reason that you should not be able to perform well in this industry if you do put in the effort, if you do put in the time. But because venture is biased so heavily to charismatic personas instead of people with actual substance, you'll see a lot of people who do not like have the time and don't put in the effort, but they're really good at fundraising and they're really good at making management fees, and they're really good at building trust with limited partners. So I have suspicions that it will be a harder to automate job than Brom may think. That said, I think you can automate, 80%, 90% of the day-to-day work. And then that will be a massive shift in just the dynamics of the industry, where capital is allocated, how capital breaks down. I don't know. There's also a world where we have new architectures emerge. There's a lot of interesting research going on right now. And you could have real AGI. I'm not going to preclude that. I don't think it's going to happen. But, if that did, then at that point in time, we're talking about something completely different too.
Here we go. So yeah, with that said, I mean, if anyone has any questions, I think now's the time. We're happy to talk about anything that we said in the session or anything that we didn't say that you would like us to say. But I guess thank you guys so much for coming. Both of us really appreciate the time.
Yeah, we love talking about this stuff too. Brom and I have had more than a few late nights over coffee, discussing how to automate workflows and random projects we've been messing around with. Like recently, I've been using it for a lot of basic data science modeling. Massive time saver. So good times. But yeah, what questions are there? Or if anybody wants to raise a hand, drop it in the chat. We will be happy to respond.
Here we go. Can you circle
There.
back? Can you circle back from Sarah? Thank you, Sarah. Can you circle back to talking about the accuracy of the AI tools in diligence? I should probably use different tools. Currently lean on Gemini because I have free access to it. LOL. But I found Gemini at least to be highly inaccurate at times when writing my graduate research thesis on solar cells, and I've had to push back against it, and then it's completely backtracked. I'm skeptical about the accuracy, but again, maybe other tools are better. So yeah, we have used specifically Gemini with the deep research mode turned on, which kind of forces it to look through sources. We also do kind of manually go through and make sure that the sources that it's citing are actually real and there, and that its analysis kind of makes sense. There are certainly times where it gets things wrong. I guess the question is, the benchmark is, does it get it right more often than not, or does it get it right more often than some analyst intern might?
Yeah. So I think that last point's the most important. If you think about how accurate it is, the fundamental issue you're dealing with, so structurally, I hinted at this, but you're looking at a complete the sentence engine that uses the transformer architecture to put weight and give more weight to different words in the sentence. So then it is more intelligently able to predict what should come after it. And especially if you're using it in a question and response way, instead of in a complete the sentence or a different prompting architecture, the questions can sometimes bias the answers because of how the transformers work on the back end. And so understanding that the more complex prompting you give, the more discrete instructions, the better context the model will have to give an accurate response. But that you're also always going to be limited by statistics. And the nicher you get into more less covered fields, like the example of this being I was having a conversation with somebody I met via TikTok, of all places, around board game rules and how ChatGPT could not understand most board game rules. And it's because there's not enough training data and enough reinforcement on those rules for it to get logged in the system statistically to be significant. You just have to watch out depending on if you're asking like a general question or a more specific question too. And that's basically where I found the better applications. There is complex prompting systems, and we will link some resources on both prompt construction, zero shot, and few shot learning, and just how to think through that intelligently, but also broadly just, validating things for yourself instead of just letting the AI run.
Yeah, 100%.
All right, we can sit in awkward silence. Does anybody else have questions? Feel free to raise hands. Otherwise, we can start our closing out. Yes, there will be a
Yes.
recording of the call available. Um, all right,
Look at the question
Christopher.
before. We got
Yes.
Gustavo. Lots of the info we generate is unstructured, diligence docs, pitch decks, etc. One way we can use this data is by building RAG workflows, but that can easily get pretty technical and expensive. How are you thinking about these solutions? Have you seen examples of it before?
Yeah. Okay. So I, at least personally, have tried to avoid building RAG models because they can get very technical and very expensive. I have seen examples. I find the better use case actually is to design a system to process your unstructured data and to make it structured data, and then access that through a more traditional model architecture, semantic search, or similar. It does depend a little bit on what your desired outcome is from the data. But usually the better application of AI here is, instead of focusing on that unstructured data layer, is to focus on how to make that a structured data layer instead.
That is correct. The extraction should be first.
Yep. And then we have one more
It's
question. Who do you think AI will leave behind?
Mark Andrees. No, I'm just kidding. Not me or anyone on this call, obviously, but I mean, look, one of the things that I saw at some of the hedge funds that I worked at is that there are certainly firms that are very slow to adapt to new technologies, and that can really hurt those firms in the long run. And so I think that the people that it hurts are the VCs who are really sold on this idea that VC is really just all about the human relationships and there's really no place for technology in VC. Those people are going to have a hard time keeping up with the firms that are going to start moving at a much accelerated pace due to AI.
Yeah, I mean, I think especially as you think about like people who are perhaps a little bit more security concerned than they need to be, or people who
That's a big
fear
one. Yep.
AI. Um, and this is something I've seen directly when implementing software for, multi-billion dollar firms and some of the bigger clients, where you are slowing your own adoption. You're also handicapping yourself if you're not willing to use AI in a certain workflow, or you're not willing to run AI over certain data. Eventually, the younger, more attuned people will run circles around you. But that kind of happens in venture anyways as a natural cycle. It's not that much different from the new guard replacing the old broadly either. Uh, and I, Jason put a comment in there. I'm going to decline to answer that and plead the fifth.
Yep.
Okay. Saurabh says, any interesting pitches that we thought could be a game changer, and something general trends on how founders are responding and creativity and tech. Brom, do you want to take this? I don't do
Yeah.
much
I
that
don't.
overlaps with modern AI in the sense where most of what I do is pretty on the technical applications of
Mhm.
like convolutional neural networks and similar. Um,
Yeah, I don't know that I have a good answer to Sarab's question, frankly.
yeah, and then Taran's working on a startup trying to automate deal screening and diligence. What are the largest pain points that you see?
Hmm.
I mean, part of the issue and part of the reason I run a consulting firm and did not commercialize the technology of Viridian for a startup is that every firm has different problems, every firm has different workflows, and every firm tends to operate in their very unique way that makes it incredibly difficult to build off-the-shelf software for them. That's why at least from rumors I hear on the street, that you'll see certain people struggling with CRM adoption, CRM churn, that you'll see issues with these data platforms because they don't really fit into a workflow off the shelf. And they will never because everyone is like so disorganized in this industry, has no standardization. Because for as much funding as it's gotten over the last decade, it is still very much a cottage industry and people operate in their own ways. Bro, I don't know if you disagree with that, but that's at least what I've seen through Viridian.
Yeah, that's true. I mean, the big thing that's a huge pain is just keeping up with founders and responding to them ti in a timely way when you have multiple pitches, per day. And unfortunately, the AI solution to that is what I said I don't like earlier on the call, which is the idea of AI just responding to founders and giving them feedback. Um, so I'm not really sure what the answer is there. Final thoughts on managing personal CRM, best tool recommendations. Um,
All
I'm
right.
not a Notion lover personally.
I'm not a Notion lover either. I will say with a healthy dose of personal bias here, I use harmonic connection analysis and connection tracking to do it. Look, it's not necessarily the cheapest solution. If you work at a large enough firm, though, it's included with their normal data packages. I love it. It's been effective for me. Outside of that, I just use Airtable. Like Airtable's got a good API. It's easy to use, good to build on top of.
Yeah, I mean for the firm CRM, we do use Affinity,
Oh, you do,
even though
Brom.
yeah
No.
we do pay for Affinity.
Okay.
There
Affinity is,
there's a new CRM that is getting a lot of press called Adio,
yeah.
ATTIO, that looks quite promising from the demo.
Yeah. Adio is quite solid, of things we've integrated with for Viridian. Affinity's API is one of the hardest things I've had to work with in
Yeah,
my
it's annoying.
career.
It's really annoying.
I like HubSpot or Streak better too. Somebody said Meridian earlier. That's more of a private equity CRM, but it's not something that I have used directly, at least in the direct world. All right.
There's a guy, you said any additional useful fund accounting or finance tools. There's a group called Zive, Zive.ai, which is like full AI fund admin. It's like incredibly inexpensive and it's all based on LLMs on the back end. So worth checking that out.
Yeah, and there's one other guy who does this too. Sorry, let me pull this up. Haven Tax also does similar on this one. Did we look into Clay? Yes. I don't think Clay's a great fit for a VC model, but again, it depends on the firm and how you operate internally. CRM selection is like you need a CRM that fits the culture of your firm. Some people need to be on Salesforce. Some people need to be on Microsoft Dynamics. That is, some people might fit better on Clay. I've seen some people on like, oh shoot, Brom, what's the really old CRM that
Salesforce?
Zoho. Zoho.
Zoho, yeah.
Yeah, I've seen some people in Zoho. Some people use, oh goodness, I'm like a Savanta Dealflow too. That's a really dated software. But again, it's like honestly sometimes easier to work with than Affinity or some of the newer solutions. So it depends on what your price range is, depends on what you're looking for. But yeah, I like honestly should write a full article at some point about different CRMs and pros and cons. It's just I feel like it's a boring topic.
Yeah.
Uh, all right, I think we're gonna wrap up here. If there are any last questions, feel free to run through. But bro, if you want to go to the next slide, we have some additional resources
Yeah.
and our contact. Oh, okay. So there's a couple of papers that I just like strongly recommend you read if you're interested in the space. the LLMs are few shot learners is one of the like canonical LLM papers that's ever been published. It will help you understand a much better approach to prompting, prompt structure, prompt engineering. If anything, I think that like improving prompt engineering skills is one of the best like upskilling processes you can go through right now. Um, it's very helpful and can get you much better responses out of your LLMs. And then there actually have been several people who have tried to predict the success of startups using ML. This is just one of those papers that I've linked. This I thought was one of the better written ones. I wrote an article that covers a lot of the topics and applications that people use today. And then feel free to email either of us. We're also both on LinkedIn. I'm on TikTok. Brom is sometimes on TikTok when I can
That's
convince him to
right.
post. Instagram, hit us up. These are topics we love chatting about and are always open to helping people out because, frankly speaking, both of us want to see a lot more automation, a lot more access to the venture capital ecosystem than there is currently.
Awesome. Thanks so much to everyone for coming. Really appreciate the attention and the time. And like Andrew said, feel free to reach out.
Awesome.
Awesome.
Good,
See
good
you
stuff.
guys.